Alright guys, I'm coming on here real quick to do a quick little review on today's market. Actually did like some crazy shit. I didn't participate in today's market, but I did something nice. I'm gonna explain like what I did and why I expected price to move at a certain direction at this point. But today I didn't take any trades because it's NFP week, and during Wednesday, Thursday, Friday, I'm not trading those days during NFP week. The only time I'm gonna trade for Wednesday is in the pre-market session, but for the rest of that, I'm not trading. And today I woke up for the pre-market session, but non-farm employment news was actually at 8:30 a.m., which is 5:30 a.m. for me, and yeah, I didn't trade that. So I ended up skipping out on today. My trading for the week is done. So now I'm just gonna do this market review. But I wanna point something out. I learned of these concepts a little while ago. It's called liquidity void and a common fair value gap. They both go hand in hand together. They're good to use together, and they're good indications of where price can move. And I learned, well, I didn't learn, but I'm going to explain to you guys the logic and theory behind it on why I expected this move. And yeah, it's pretty much this point right here. I'm not really breaking, this is just me like testing out the market. I'm sitting here studying while analyzing what the market's going to do, playing around, seeing what we're doing and stuff like that. So I'm not going to get too much into this, but what I want to point out is this here. So I put this mark here yesterday, not today, not after the market closed, not after the move happened. I put this point here yesterday. Why did I put this point here yesterday? Well, yesterday I was thinking about how short-term highs, short-term highs, single highs, are points where we can expect price not to really break often, because if you trade ICT concepts, we know that we want to see things like this. See these relative equal highs. Why? Because they get taken. You can see it right here. It gets taken and it moves up to minor buy side liquidity. And let me just highlight that here. This is relative right here. So this is juicy for price to want to run the stops here. People are placing their stops here as support. And what does smart money do? It comes down here, rips it up, and all these bio stops and all these sell orders initiate and push price higher. So in order for it to actually hunt this level, it has to create a safe looking area for retail buyers. And what does a retail buyer like to see? Relative equal lows. They see this as a support line. Price does not want to violate this point. So we move in here, we engineer relative equal lows for buyers to feel like they can put a nice stop here. We trade up a bit and boom, we stop them out by a tick just to get them out of the market, and we move higher. So with this logic being said, we have one short-term high here. I wasn't expecting this high to get taken for free. I was waiting to see price engineer liquidity. So yesterday I noticed we had this liquidity void here. What a liquidity void is when we have all these downrange candles here. All these large downrange candles here. So we have this liquidity void, and if I go into the 15-minute chart, I'll show you right here. I was analyzing this on the 15-minute chart. Look at this whole liquidity void here, being untraded into, unfilled, whatever. None of this was traded to during the session. And this was this was yesterday's session. So we left this point here. Yesterday's session, we formed the liquidity void. And on the 15-minute chart, we see we have a common fair value gap here. And what a common fair value gap here, it's not this here. This is a regular fair value gap. This right here. This price delivers upward movement. Price delivers to buyers, but it doesn't deliver to sellers. So these are buy orders. No sell orders to match those buy orders. This is an inefficiency in price. So the inefficiency in price is going to have to deliver it and fix that efficiency to make price efficient. So it delivers here and it goes through, but we have this common fair value gap where price does not even trade in this level yet. It doesn't even trade in this level. I mean, right here you can see it, but there's an imbalance. Common fair value gap. What I was expecting, since we had this single high, was for price to engineer liquidity, meaning we had to get some sort of relative equal high in place, somewhere, anywhere. It could be anywhere. I wanted to see price come up, do something like this, so now we can have these relative equal highs. You see how they're close into proximity? That's where a seller in this market would place their stops, because it's relative. It acts as support. It looks like support. So this is what I was expecting. Some sort of rebalance like this so that we can engineer liquidity. I placed this yesterday. Now we move into today's session. And look. We're doing all this back and forth, back and forth, back and forth, back and forward. Gets to this exact point right here. Nothing more, nothing less. Exact point right here. Nothing more, nothing less. And it shoots price all the way fucking down. 200 handle move down. 231 move handle down. And it was funny because I actually logged in on my phone around this time because I was out and I was checking price and I was like, oh, it's about to return to my level. But I'm not going to take a trade on my phone, and I'm also going to stick to my rules and not trade on an NFP day. I don't regret it, but this was nice to see. Look at how perfect it respected that level. You can't get any better than that. This is another reason why I trust ICT, and I don't believe anyone else who says his concepts don't work. They just haven't put in the work. I wouldn't be on here capping and saying I figured this out after the fucking market closed and after it already did this. I'm not that type of person to, oh, let me go into the 15-minute chart and find this, put this here, and then convince people that I'm a beast and I can read price or some shit. I'm not that type of person. I can assure you that. No one even views these shit, so this is for me to look at later, to be honest, and be like, wow, I came a long way and shit. But yeah, so this is a nice like pat in the back that I was able to see this, and I was able to use a logic of engineering liquidity. We can look, I even wrote it here. We can expect price to engineer liquidity here. And what does it do? Engineer liquidity. This creates relative equal highs. Not as great, but it does. Not as crazy, but it does. Let's see. It looks cleaner on the 15. Not as crazy, but it is relative. And then obviously we reach into relative equal lows for the sell side. We hit this first presentation from Friday, and fucking price does this crazy ass fucking move higher. This is like a, let's see, 300 handle move high. This was closed right here, so like a 200 handle move up until close. Crazy. Came right up to the sell stops right here. Right here, or buy stops, whatever they are. I'm not thinking right, but I wanted to point out this point here, and I wanted to share my knowledge here. I think it's really important to understand certain things, like why a fair value gap is a fair value gap, why sell side liquidity is sell side liquidity, and what is an inefficiency in price. And those things, like, I've been doing ICT for about 7 months now, 6 months now, and all these sort of concepts like buy side liquidity, sell side liquidity, inefficiencies, they were all more like kind of like PD arrays. They're PD arrays, right? But I wasn't understanding the logic behind these PD arrays and why they work the way they do. But that's what I've been working on lately. I've been working on, so I already know like what a breaker is, what an order block is. Like, I know it by the view of what it looks like as a candle. But I never really understood the logic behind it, right? So that's what I'm practicing now. I got the skill set, and now I'm trying to understand the logic behind it. And with the lot, like, I would have never been able to expect price to engineer liquidity right here at this common fair value gap on the 15-minute chart. I would have never expected it to do this unless I understood the logic behind price. And what price wants to do is engineer liquidity before it runs higher. And that's exactly what it did here. Engineer liquidity. Smart money ran out whoever was down here. Whoever's bought and put their sell stops here. Smart money, large institutions, boom, come down here, take everyone out. Everyone out before they can even react. Look what price reacts off of. Friday's first presentation. Perfectly. Like perfectly, dude. You can't get any better than that. This is why I will fucking go all in. This is why I'm all in on ICT concepts, pretty much. And, yeah. If you guys haven't studied, you got to get to it, man. And if you're actively thinking and trying to learn more and trying to understand more and trying to get a better grasp on the market, and you really want to understand how these things work, you will be in there formulating your own theories and testing them out and figuring them out and learning the theories that are already laid out for us. But yeah, guys, other than that, I didn't take a trade today. I'm not going to take a trade for the next 2 days. So I'm pretty sure I'm not going to post for the next 2 days unless I see something that I want to talk about in the market. But yeah, I'll be hands off for the Thursday and Friday. So yeah, you guys have a good day. You guys stay blessed and like and subscribe.